Lowe's Companies is a dividend king that is buying back shares like crazy. It is also the biggest US position for Bill Ackman. But it is also a company that a lot of insiders are selling in recent months. So let's see who's right. How strong is this company and is it a good investment opportunity? Lowe's Companies is one of the largest home improvement retailers in the world. They operate a chain of retail stores in the United States, Canada, and Mexico. With more than 2,200 stores, the company employs over 300,000 associates worldwide. Well, it is quite an impressive operation. So, who owns this company? Individual insiders. That is an X. Just 0.1% of the company is owned by individual insiders. And we would like to see this number over 2% because then we know that the management will take care of the shareholders because they are the shareholders. Unfortunately, it is not the case with Lowe's Companies. And are individual insiders buying? That is an X. In the last half a year, they sold over 65,000 shares worth around $14 million. And do super investors own this company? That is a check. There are 5 super investors that own Lowe's, and the biggest of them is Bill Ackman. And I made a separate video about his portfolio, so if you want to check that out, the link will be in the description. And are super investors buying right now? That is a check, but not by a large margin. In the last quarter, super investors bought over 185,000 shares and sold just over 158,000 shares. So a lot of different views on this company. And how is the financial health of Lowe's looking? Return on invested capital. That is a check at 13.1%, and we want to see a number higher than 10%, so that is a nice return. And what about free cash flow growth? That is also a check at 12.5%. And just as with return on invested capital, we want to see this number over 10%. So all good here. And what do we know about net profit margin? It is a check. The net profit margin is around 7%, and the sector median is 5.2%. So not a huge advantage over the competitors, but still an advantage. And now let's take a look at shares buyback. It is a very impressive check. In the last 10 years, they bought back 39.3% of the company's shares. That is close to 40%. So if 10 years ago you had 1% of the company, right now, without putting any extra money into this investment, you would own 1.6% of it. That's really impressive. And the debt? That is an X. It would take them just close to 3 years to pay the long-term debt with a current free cash flow. And we want to see this number under 2 years. So not a great situation, but it does not look like a substantial threat to the company either. And does Lowe's Companies pay any dividend? It is a check. They pay a dividend and the dividend yield is 2.1%, which means you get $4.20 annually per every share. And the payout ratio? It is also a check at 28%. And we want to see the payout ratio somewhere between 20 and 50%. So it is a very nice situation in which we get a really decent amount of profits through dividends. But it is not so big to actually threaten the sustainability or growth of the company. And what about dividend growth? It is a check with 19.5% 5-year growth rate. And the company is growing the dividend for 59 years. So they are a dividend king. And that is a company that is growing its dividend non-stop for over 50 years. That is very impressive. Okay, so now let's value this company using a discounted cash flow formula. We will have to estimate the growth of Lowe's companies for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. So in the low scenario, we will estimate a growth of 8% in the first 5 years and then 6%. In the medium, we will start with 10% and then slow the growth to 8%. And in the high scenario, 12% and then 10% since year 6. So with such estimates, the intrinsic value in the low scenario is $188, in the medium $223, and in the high one $263. But these are not the prices we should be buying this company for, because we have to always add a margin of safety. I use a 30% one just to make sure that even if my estimates are wrong, I still have a decent chance of making this investment work. So with such a margin, we get $132 in the low scenario. In the medium, we get $156, and in the high scenario, we end up with $184. And the current price is around $200. So without the margin of safety, the medium and high scenarios are in the green. And actually, even with a 30% margin of safety, the high scenario is not that far away from the current price. Lowe's is a company that has a very nice financial health, incredible amount of shares buyback, and a very nice stable dividend, which got them to the most exclusive club of Dividend Kings. Also, the current price is close to the intrinsic value of the company. The only really worrying thing is the growing debt, which went from $14 billion in 2019 to almost $24 billion in 2022. But if they can sustain the current free cash flow levels, they should be fine. That's all for today. Thank you for watching, and I would really appreciate if you would press the like button to make YouTube know that you found this video interesting. Thanks again, and bye-bye.